Hi there, I'm Joan Feldbaum-Vidra and I head up KBRA's Sovereign Rating Group. In response to rising geopolitical risks, KBRA thought it would be a good idea to release this brief clip on our thoughts on the topic, especially with regard to the oil sector, which is quite a hot topic in the markets these days. In this clip, I want to identify the main countries that KBRA believes to be the main disruptive forces in the oil markets at this juncture. At the top of this list is the U.S., due to its growing supply and also the international leverage that it enjoys. We also believe that Libya and Nigeria have significant disruptive potential. And lastly, Venezuela and Iran are critical focal points. KBRA's outlook for oil price volatility is that it will remain. Let me just start by providing the backdrop to this discussion that we also think that global demand is slackening, accelerated by the current trade conflict. KBRA expects further downward revisions to global growth. We are concerned about China's growth outlook, especially in the context of its heavy leverage. So on to the so-called Great Disruptors in terms of oil supply and other dynamics. Have a look at the following table. This table ranks the top oil exporters at the end of 2018. What's notable here is that the U.S. is not at the top of this list, but KBRA expects that it will be in time as the U.S. continues to expand its production. The U.S. is the main oil markets disruptor in KBRA's view. This belief spans well beyond its expected rising supply. The country exercises tremendous leverage over international affairs, and as such, the oil markets, thanks to its dominant size and the international role of the U.S. dollar, the primary currency of oil trade. The U.S. has proven its disruptive potential through trade measures, as we all know. The U.S.'s size and its oil consumption needs also makes it a disruptor in terms of global demand. The next biggest disruptors, due to heightened domestic political and security risks, are Nigeria and Libya, in our view. Nigeria is the 9th most important oil exporter. Militants there have repeatedly attacked oil infrastructure in the country. Vandalism on oil infrastructure really peaked in 2016 to 17, mostly coming from the Nile Delta Avengers militant organization. Libya holds the largest crude reserves in Africa and is the 13th largest oil exporter, according to that table. It continues to be at very high risk of security-related events. Libya is still engulfed in a violent civil war characterized by the limited authority of the state in the post-Gaddafi era. Venezuela and Iran have huge disruptive potential. KBRA expects Venezuelan and Iranian production to continue to head south in the near term, maybe in the medium term as well. Regarding Venezuela, its politics are slowly transitioning towards a post-President Maduro government, but this transition remains elusive. The main impediment to the transition moving forward is the loyalty of the military, which is also backed by Russian military support. Moreover, there's a very long road ahead before we believe that Venezuela's oil company, PDVSA, will be able to rehabilitate its production. Iran's capacity for increasing oil exports is very limited by the U.S.'s recent withdrawal from the JCPOA nuclear deal. The risk of Iran's full withdrawal from the nuclear deal raises security risks, principally in the Middle East, but also beyond. Recent conflict in the Strait of Hormuz, a main transit conduit for Middle East oil tankers, has also shaken the oil markets, as we have recently observed. Thank you very much for joining us today for this discussion on the main geopolitical stress points on the oil sector. KBRA has worked hard to expand our global research and regularly authors reports on many topics of global interest. Please visit our website at www.kbra.com. All of our research is complimentary. Thank you very much.